Well, let's put the focus then on Escorts. It was a stable quarter coming in from the company this time. Profit after tax came in slightly below estimates, but revenue growth was in line. Margins have seen a slight bit of a contraction in the fourth quarter, so coming in at around 11.6% versus a 12.1% that we got in the same quarter last year. We were also factoring in margins to come in at exactly 12%. So let's try and understand then what factored into these numbers. We have Bharat Madan, Group CFO at Escorts, joining in, really put this in perspective. Welcome, Bharat, and thanks very much for joining us on the show. It isn't just your company, really. There's this overall sense of some kind of a slowdown as far as the auto space goes. The question on everyone's mind is really, when will the pressure ease? When will things improve? Just as an overall assessment, what do you make of the situation as things stand? How constrained is your financing, and what does the underlying sentiment look like? All right, I think a little trouble there with the line. We'll try and get the line back for us. But just to take you through some of the more detailed numbers, as far as the fourth quarter goes, it wasn't a big miss. It was a marginal miss, but it was across metrics. So we did see a squeeze come in, as far as the top line number goes. As far as the margins go as well, there was a contraction coming in. Profit after tax came in higher by nearly 8%. It was still a miss, coming in at 121 crores. The comparable figure was about 113 crores for the same quarter last year. Revenue from operations came in higher by about 13.5% at about 1,632 crores. The comparable figure was about 1,400 odd crores or so. The margin is where we're seeing a bit of a squeeze. EBITDA margin coming in at 11.6% versus a comparable figure of 12.1%. We have Bharat Madan back with us on the line. Then Bharat, my question essentially to you is just an assessment of the situation at this point in time. We're seeing some amount of pressure as far as the numbers go. It's being reflected in your numbers. It's coming in the monthly auto sales figures as well. Where do things stand as far as financing goes, and of course the underlying sentiment?
Well, I think overall, if you look at the last quarter numbers, obviously the industry has been slowing down, and we've seen that things was happening now continuously after December, after November, actually the festive month, and after December onwards, we're seeing the market going down gradually. And obviously March, April, we've seen the maximum decline happening in the industry at close to 16%. So that's why the trend has been actually slightly on the slower side. But overall, still we think, I think if you look at the cost number, I think we've done reasonably well. Even in the last quarter in Q4, the company has been able to grow its numbers. In the industry has shown a decline, but we outperformed the industry. And we had a highest market share, I think, in close to a decade in any quarter of about 15% in Q4. And I think on the ground situation, typically looks slightly impacted because of the, I think, slight delayed harvesting, which is impacting the money availability in the hands of the farmers, and also because of the ongoing election scenario. So we think maybe April and May month will be slightly weaker now. So maybe towards the end of May, after the elections are over and the outcomes are known, probably the things will start improving. And by the time, hopefully, the harvest season should also be over and people will have more money in their hands to really go for the tractor buying. So we expect May and June really should see good growth in terms of the volume. I think that's a number. But yes, looking at the slow months of April, May, maybe the whole quarter may not be as bullish as we actually got it earlier. So we're looking at more like sort of flattish quarter in terms of overall numbers for Q1.
All right, you had put in an estimate of about 5 to 8% is what the kind of growth that you were anticipating as far as the tractor industry goes. Where then would the number come in for your company? What kind of growth are you factoring in for the business if we talk about fiscal 20?
Well, the growth for that is for 5 to 8% for industry. Typically, really will depend upon if the monsoon happens to be extremely good and well distributed. So as of now, I think it's too early to comment about that unless you see the season, how the monsoon really pans out and how the distribution happens. In that case, we say the guidance probably will be in the range of 5 to 8%. And since we have been actually outgrowing the industry in the past too, so that trend will continue from our side. But definitely, if the monsoon happens to be bad, then there will be some downside possibility also will be there. I think that will be more visible in the second half of this year. So as we speak, I think in the last few months, we've seen last 2-3 quarters, the industry in the southern industrial market have not picked up, which is impacting the overall industry, then the demand and the situation. But our market is really strong, especially in the north and central India and the eastern side. We've seen the demand pickup has been there. So we expect the same momentum will continue unless we have a very good monsoon in the southern side, then that peninsula likely gets good water. But water availability is a major issue which is impacting the demand in those markets.
All right, so just to get an estimate on the margin front, then we've seen a 200 basis point hit coming in, particularly for your tractor segment as far as the fourth quarter goes. Where do we see tractor margins come in going forward, and the overall margin figure as well? Can we expect it to remain, at least double digit or below the 12% mark?
Well, yes, look at the Q4 standalone, we have seen some dip happening in the margin front because of the mix issue which we had on the product side. Because most of the demand which came was on the lower end of the tractor segment, which is in the sub 40 HP segment actually, where the margins are not really that great compared to the higher HP segment. So, but going forward, we expect that correction will happen because we also introduced some product range in the lower HP category last year, and actually the last Q4 of the last year. So, and this year we've seen the full year impact of that. But since there are the introductory products and the pricing is also introductory, we expect to take the price increases now and this year. Some increase we already taken in the month of April, based on some features which we added on certain products. So going forward, I think on a full year basis, we had done an improvement in the margin on tractor business by about 40 basis points, and we expect the similar trend probably should be visible on a full year basis in FY22.
All right, just a word on the railway segment as well. Then your order book stood at about 490 crores as far as the end of Q4 is concerned. What is the expectation as far as the railway order book goes for fiscal 20?
So like last year, we've seen almost 37% growth happening on the railway business side, and also a lot of margin expansion which happened because of the good product which we had over a period of year. And we expect the FY20 also, we should continue to see the good momentum on the railway business side. And keeping the order book size in view, we expect 20% plus growth possibility definitely remains for the railway business. And the margin should also be in the range of 18% for the full year for next year.
All right. There is, like we were discussing, this sort of overall environmental sort of a slowdown. It's not just the kind of supply constraints that might be facing some, members of the auto industry. It's also the demand side of things, essentially. What would be the situation on the ground as far as rural demand goes? I understand, of course, that we have to await the monsoons, but any sort of early trends that you are picking up on that front? And in terms of the election impact, if you could just highlight for us how things have panned out. Do you expect an immediate sort of pickup on the back of the elections, at least once election season is behind us?
Well, yes, everybody expects a stable government. I think so. The outcome of the election, if it will lead to stable government, should be positive for all sectors, whether it's infra or agri. So that's what we are also hoping for. So hopefully it should not lead to some sort of coalition management going forward. So that should definitely help continuation of a lot of rural policies the government had announced in the past, and continuity always helps in sustaining the demand going forward.
All right, where do inventory levels stand at the moment, and what really is the plan or strategy to bring that down? Any timelines you can share with us?
Sorry, timeline for?
Inventory levels.
Inventory levels, like you said, I think by end of June, we should be back to the normal levels because we had some build-up of inventory in view of expectation that the season will go well, which unfortunately hasn't happened. So that correction is obviously now taking place as we speak. So hopefully by end of June, we should be back to the normal levels of inventory.
All right. So inventory levels then expect will be normal at least a few months from now. Would you be looking to undertake any price hikes at this point in time?
So as I mentioned, we've taken some tactical price increases in the month of April, but that's only on certain products, not across the board. Because the last quarter, we didn't see much impact on the commodity prices. Inflation has been more or less stable, no major movement happened on the cost front. And we don't expect that to continue. So it's really, if you're looking at the entire auto segment also, whether it's passenger vehicles, commercial vehicles, or in the tractor space in the industry, that slowed down. So we don't see the commodity cycle pressure will be there really on the material cost front. So that should lead to some stable pricing at least for next 1 or 2 quarters.
All right. Thanks very much. We'll leave it at that, Mr. Madan. Appreciate you joining in, putting those numbers active for us. Largely in line, it was a steady set of numbers, in fact, that we saw coming in from Escorts. Slight contraction on the margin front. We, of course, have lots to watch out for in terms of how the demand really picks up. Consumption remains front and center and a big concern for the economy, of course, in the aftermath of the elections. And, of course, as we await how the monsoon pans out for India as well. But that's the view coming in from the CFO of Escorts, Bharat Madan. But let's put the focus then on the markets as we count down to election results just over 2 weeks from now. Uncertainty remains front and center, and, of course, volatility continues to rule the streets. So what should be your investment strategy then at a time like this? Vinita